Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading systems. And today we're breaking down a classic piece of price action engineering called the Darvas Box Breakout. This expert advisor for MetaTrader 5 is built on an idea that's been around for decades, yet it uses no traditional indicators at all. Instead, it reads raw price structure, watching how a market quietly consolidates inside a horizontal box before it explodes out one side. By the end of this video, you'll understand exactly how it spots those boxes, how it confirms a breakout, and how it places its stop and target. Let's dive in. So what exactly does this expert advisor do? At its heart, the Darvas Box Breakout is a pure price action system. That means it doesn't rely on moving averages, oscillators, or any classic indicator. Everything it knows about the market comes directly from the open, high, low, and close of each candle. This approach traces back to Nicolas Darvas, a professional dancer turned trader in the 1950s, who noticed that prices tend to travel in a series of stacked rectangular boxes. Inside each box, the market pauses and consolidates. When price finally pushes decisively out of a box, it often signals the next leg of the move. The strategy works on any symbol and any time frame you attach it to, because boxes form everywhere markets trade, on currency pairs, indices, metals, and more. What drives the entire system is structure. The strategy measures the highest high and lowest low over a recent window of bars to define the top and bottom of a box. It then checks whether that box has genuinely settled, rather than still actively trending. It uses the average bar range as a simple volatility yardstick, which lets it filter out boxes that are too tall and loose to be meaningful consolidations. Who is this style suited for? Educationally speaking, it's a great fit for traders who appreciate clean, rules-based logic and who like the idea of trading momentum as it escapes a quiet range. It's a breakout system, so it's looking for expansion after compression. It trades in both directions, going long when price breaks above a box and short when price breaks below one. And it always defines its risk up front by placing a structural stop on the opposite side of the box. Remember, everything we discuss here is for educational purposes only and is not financial advice. We're studying how the code thinks, not promising any particular outcome. Let's walk through the exact logic, step by step. The first thing to know is that this strategy only acts on completed bars. It ignores the noisy, still-forming candle and waits for a bar to fully close before making any decision. That keeps its signals clean and repeatable. Once a new bar closes, the strategy builds a box. It looks back over a window of bars, the BoxLookback, which defaults to 20, immediately before the bar that just closed. Within that window, it finds the highest high, which becomes the box top, and the lowest low, which becomes the box bottom. Those two levels define the consolidation range. But not every range is a valid box. The strategy applies a maturity check. Both the top and the bottom must have been established at least a few bars earlier, controlled by minimum hold bars, which defaults to 3. This confirms the box is actually held and settled into genuine consolidation, rather than being a fresh extreme in an active trend leg. Next comes a tightness filter. The strategy calculates the average bar range over the range period, 14 bars by default, and uses it as a volatility proxy. If the box height is taller than maximum box range times that average, 3 times by default, the box is rejected as too loose and trending. We only want compact, coiled ranges. Now the breakout. The strategy detects a long signal when the bar that just closed closes above the box top by a small buffer. That buffer is a fraction of the average range, set by buffer multiplier, and it filters out marginal pokes through the edge. When that happens, the EA signals a buy at the ask price. The stop loss is placed just below the box bottom, a structural stop on the far side of the range. The take profit is set at the reward multiple times the risk, so with the default reward of 2, the target sits twice as far away as the stop. The short side is a perfect mirror. When the freshly closed bar closes below the box bottom by the buffer, the strategy signals a sell, places its stop just above the box top, and sets a take profit at the same reward to risk multiple below entry. Only one position runs at a time, and the stop and target manage the trade from there. Let's read through the actual meta quotes language code you see on screen, just as you would inside Meta Editor. At the top are the input parameters, These are the tuning knobs you adjust in the EA's settings window. BoxLookback sets how many bars form the box. A larger value looks for wider, longer-lasting ranges, while a smaller value reacts to tighter, more recent ones. Minimum hold bars controls how long an extreme must have held before it counts as a settled box. Raise it to demand more patience. Range period is the number of bars used for the average range volatility measure. Maximum box range rejects any box taller than that multiple of the average range, so lowering it keeps you in only the tightest consolidations. Buffer multiplier defines how far beyond the edge price must close to confirm a breakout. Reward sets the take-profit distance as a multiple of risk, and lots is your order size. Now the signal logic. The variable named trigger close holds the closing price of the bar that just finished. The condition checks whether that close is greater than the box top plus the buffer. If it is, the strategy reads the current ask price as the entry. It then sets the stop loss to the box bottom minus the buffer and measures the risk as the distance between entry and stop. As long as that risk is positive, it calls trade.buy, passing the lot size, the normalized stop, and a take profit computed as entry plus reward times risk. The short side mirrors this exactly, selling below the box bottom with the stop above the box. Let's watch the strategy in action on this illustrative chart. Notice the two blue lines. These are the box top and the box bottom that the strategy has drawn from recent price structure. In the first part of the chart, price is coiling quietly between the lower box bottom near 1.0840 and the box top near 1.0865. For several bars, it just oscillates inside that range, never making a new extreme. That tells the strategy the box has settled and matured, exactly the condition it's waiting for. Then, on the sixth candle, price pushes up and closes decisively above the box top, plus its small buffer. That's the breakout, and the strategy signals a buy entry. As you can see, the stop loss would sit just below the box bottom, defining the risk up front. Price then continues to climb, and by the eighth candle it reaches the take profit level at twice the risk distance. The long trade closes in profit. Now watch how a new, higher box forms as price stacks into a fresh consolidation between roughly 1.0890 and 1.0912. Again, price hovers inside this upper box, holding its extremes. But this time the breakout comes to the downside. On the 12th candle, price closes below the box bottom minus the buffer, and the strategy signals a sell entry. The stop loss is placed just above the box top, and the take profit sits twice that distance below. Price falls steadily and tags the target on the final candle. There you have it, one long and one short, both born from the same simple rule. Wait for a settled box, then trade the decisive break. This is purely for educational purposes. And that brings us to the end of our breakdown. Today we explored the Darvas Box Breakout, a pure price action expert advisor that reads raw candles to find settled consolidation boxes, then trades the decisive break in either direction with a structural stop and a fixed reward to risk target. We walked through the box building logic, the maturity and tightness filters, the actual meta quotes code, and a visual example of both a long and a short trade. Remember, everything in this video is educational content only and not financial advice. If you found it helpful, please give it a like, hit subscribe for more MT5 strategy analyses, and drop your questions in the comments. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.